Look, I might have to be honest with everybody, and today was just simply not my day. Down about $1,000 today, and today I'm gonna try and respond a little bit to the question of, are we heading into a recession? With stocks like Amazon down 4.52% just today. The Nasdaq Composite Index lost 2,000 points in 3 weeks. Stocks like Lululemon down 53%. Stocks like Nike, don't even get me started on Nike. The consumer sentiment is so low. Stocks like Estee Lauder companies down 33.84%. Like Apple down 6%. Intel down since they're high, right? 30, they're not 20, 27%. Stocks like Nike. I mean, look, don't even get me started on Nike. Let's go over Nike. Nike's probably down a lot as well because they've been destroyed. Another 3.77%, right? So stocks are not good today, right? So let's get into why. And let's get into whether or not we're going into a recession or not, and whether or not we should sell now, right? So, the fear and greed index. That's one of the things we're going to look at. The fear and greed index is right now, obviously it's not something you should always sort of look at, but we are at 27, so we're very, very close to extreme fear if you look at what emotion is driving the market. So we are in fear. And now let's look at one of the biggest and most notorious that is known for predicting the market, predicting crashes, the best of all of the rules and ratios that there are. What is the SAM rule? The SAM rule is named for noted economist Claudia Sam, who has accurately forecasted every US recession since the 1970s. Basically, the rule says that if the jobless rate based on a 3-month average, right, is a half percentage above its lowest point over the previous 12 months, the economy has tipped into recession. Friday's jobs report technically meets Sam's rules criteria. The jobless rate in July rose from 4.1 to 4.3, taking the 3-month average more than a half point above the 3.6 average 1 year ago. Let's look at how accurate it is. So that's the SAM rule recession indicator. So the 0.5 is magic because every time we get into a recession, every time we're at 0.5, boom, 0.5, recession. The gray areas are basically what chose to be a recession, right? So here, boom, crossed 1.5, went up to 2.5, recession. This one here, it led straight into the 1970s recession, right? Which started again 1.5. 1.5, boom, starting. 1.5, boom, starting, and we're going up to 4. And that's just crazy. Every single recession there is, it has predicted it, right? And here, look, 2008 predicted it perfectly. And the thing is, and the scary thing is, look here. We are right now at the levels 0.5, which means that we're probably heading into a recession. That's what the SAM rule indicates. So let's go into this right here. So here, at that point, right, 5% of unemployment rate was enough to go ahead and tip the economy because it went from 5% up to 10% at its peak, right? Meaning that likely worst case scenario, if you look at this right here, that was 2020 with the COVID crisis, we're at 4.3. So best case, all right, it stops at 5% to 6%, or likely worst case, we face 5 to 8% unemployment, meaning that we are getting into sort of these gray areas, meaning we're going into a crisis. And that's scary when you look at that. That is what's scaring me, because the SAM rule is such a notorious sort of thing to indicate that stocks are going to collapse. But it's not only that that's showing that. It's not only that. Look at this. Best Global Brands 2023. Their earnings. Weak. Okay, Microsoft good. Weak Amazon. Weak Google. Weak Mercedes-Benz. Weak Coca-Cola. Weak Nike. Weak BMW. Weak McDonald's. Weak Tesla. Weak Disney. Louis Vuitton weak. Cisco weak. The only good ones are Toyota, Microsoft, and Samsung, the top 20. So it's not only the SAM rule that's saying it, but global brands are also saying it as well because they missed their earnings. And stocks are really not looking good, right? Stocks are not looking good. We're down a lot. And the question is that just the beginning? Or is that not the beginning? And that's what I'm trying to find out. But what I find really, really, really weird is that a lot of these companies like Microsoft, right, they're growing like 20-25%. And they're at a PE ratio, right, of 30%, of 30, which is completely fine. So I wouldn't say they're overvalued. So if all right, we get into unemployment rate, hike, boom, unemployment rate, and the stocks go crashing down, that may be an opportunity to buy some more. So again, the SAM rule indicates it, the earnings are bad. I sold already some stocks 1 week ago when I looked at the SAM rule, and I'm happy I did because a lot of stocks have been going down. So now I have a little bit of money reserved so I can go ahead and invest once we've really crashed. Yeah. So, I mean, keep that in mind. I'm just trying to give you the information so that you can sort of build your own mind, but keep the SAM rule and the bad earnings reports in mind when buying stocks in the dip now. Because who knows, it might just be the beginning. Just trying to armor you with that information. Obviously, do your own research, but